everyone, and thank you for joining us. I'm excited to welcome Mike Golembeski, a featured analyst at ElliottWaveTrader.net, where he hosts subscription services around analysis of Forex and the VXX. Mr. Golembeski, thank you for being here. The floor is yours.
Thank you. All right, thank you everyone for joining us. I'm going to be discussing today the potential end of the generational bull market that we've seen for the past 90 years. But before we get started, I want to give a little introduction about myself, who I am, and what I do. All right, so I am Mike Golembeski. I'm a senior stock market analyst who focuses on the U.S. equity and volatility markets. I have over 20 years of experience in working in the investment markets, and I've been a practitioner of Elliott Wave analysis for more than a decade. I can be found at ElliottWaveTrader.net in our flagship markets alert service, which along with the founder of ElliottWaveTrader.net, Avi Gilbert. So a little bit about our founder, Avi Gilbert. Avi Gilbert is the founder of ElliottWaveTrader.net. Avi is an accountant and a lawyer by training, and he has a comprehensive understanding of businesses and their evaluations. Despite his background in economics, Avi had to unlearn everything that he had learned in the field in order to more accurately analyze the financial markets. This led him to founding ElliottWaveTrader.net in 2011. ElliottWaveTrader.net is a live trading room and a member forum focusing on Elliott Wave market analysis. Again, it was founded in 2011 with just a few members and one analyst, Avi himself. Today, we have grown to serve over 8,000 individual members, and we have 1,000 of those members are professional money managers. With the addition of over 20 analysts, we now cover just about every market that is openly traded throughout the world. So as the name of our site implies, we mainly focus on Elliott Wave analysis. So before we get into the details of what we're seeing, I wanted to discuss a little bit about what Elliott Wave analysis is. So Elliott Wave analysis is a methodology that was originally devised by Ralph Nelson Elliott in the 1930s. Elliott theorized that the fluctuation of stock prices is the result of the changes in social mood and our natural instincts to herd, which is not governed by external forces. So Elliott Wave theory states that the markets move in basic patterns that repeat over and over, which are directed through Fibonacci mathematics to identify their turning points. Specifically, the markets move in a primary trend within a 5-wave structure, and then they move within a corrective trend in 3 waves. And we can see that here. We have a primary trend 1, 2, 3, 4, and 5, and then a corrective trend, which we label as A, B, and C. And this comprises the basics of Elliott Wave analysis. And these structures are, again, 1, 2, 3, 4, 5, and then A, B, C. Within these waves that are of 5 and 3, we have fractal breakdown within those wave structures. And they're repeated across all time scales and all price levels. And the compounded construction builds upon itself to form different degrees of overall 5-3 structure. And we can see that here within this wave 1, we have 1, 2, 3, 4, and 5. And then within this wave 2, we have A, B, and C. And this repeats over and over again on very large time scales all the way down to very small time scales. And when put into practice by experienced and well-trained analysts, this method of analysis can provide a roadmap for market direction and provides a probability-based framework for market prediction. So now that we've discussed the theory of Elliott Wave, let's take a look at Elliott Wave in practice. This is a very long-term chart that was compiled by one of our other senior analysts, Garrett Patton, and it shows a very long-term look at the SPX equivalent going all the way back into the mid-1850s. As I noted in the introduction, Elliott Wave is fractal in nature, and it works on very large time scales, which we're showing on this chart here. And it goes all the way down to very small time scales, which we'll get into a little bit later. We can see that in this chart, we have labeled the stock market highs in 1929 as our wave 1, our very large degree wave 1, or our super cycle wave 1. And the low that was struck in during the Great Depression in 1930, we label as our very large degree wave 2, or our super cycle wave 2. And this followed the crash, the 1929 stock market crash, that wave 2 had bottomed in 1930. During the Great Depression. From there, this entire move up off of that 1930 low and into our current levels, we are considering this one very large degree wave 3 or a super cycle wave 3. So from 1930, the bottom of the 1930 low, all the way into our current highs, this is one very large 90+ year bull market. Now, of course, we've had times in here when we've had pullbacks and recessions. World War II, we've had the Vietnam War area in the 1970s. We've had pullbacks again for the financial crisis, the stock market tech bubble here, of course, COVID. So again, all of these pullbacks and recessions are within this very large degree wave 3. Again, because Elliott wave is fractal in nature and it works on multiple time scales, we can see that we have a wave 1 and we have a wave 2, and we have a wave 1 and we have a wave 2, we have a wave 3, we have a wave 4, we have a wave 5. And again, this is within our very large degree Elliott wave structure, and we are showing that at current levels we are at or near the top of a very large supercycle degree wave 3. So what that leads to us next is that because we are nearing the top or at the top of this very large degree wave 3 that again started during the Great Depression, we are now looking at the end of a multi-generational bull market that again began with the Great Depression, which could potentially lead us to seeing a very large degree of wave 4 that could take a decade or more before finding a bottom and ultimately moving back up to new highs to complete this super cycle degree wave 5. Okay, so now before we move forward on the next slide, I want everybody to focus on this bottom here, the 2009 low, because that's really where we're going to focus next on these charts. So again, if I want to focus on our wave 1, our wave 2, our wave 3 here, and then we're going to zoom into this time scale here again, because Elliott wave is fractal in nature. We have multiple repeating patterns within every time frame. So let's look at this chart right here. We're going to look at this range right here. Okay, so this is our monthly chart, and this again, we're starting at a 2009 low. So to complete our pattern from our Great Depression low and into our current levels, we need to see five wave move within that 5-wave move. So off of our 2009 low, we have our initial wave of 1 off the lows, and then from there we've had a very large wave 3, and that took us all the way into our COVID era. We bottomed during COVID, and we made another higher high right into our January of 2022 highs. And since that point, we've seen a pullback and an inability to really get any kind of momentum off of these lows, which is again suggestive that we may have indeed struck a very large degree top here at the highs that were struck in January of 2022. So the key that we're going to be looking at over the course of the next several months is going to really determine what's going to happen with the markets over the course of the next several decades. If the market is unable to find its footing and develop a clean and 5-wave structure off of this low here and break out to new highs, it's very likely we've topped in this larger degree supercycle wave 3. And at that point, we're going to be looking at the start of a multi-decade bear market that could potentially take the S&P 500 back down towards the 2,000 to 1,000 region before finding any sort of substantial bottom. Furthermore, that timing of this move may be quite prolonged, as we have a pattern which is suggestive that this is going to be a longer term and more drawn out corrective move rather than a short and quick move down and a fast recovery. So this is our monthly chart. I'm going to zoom in one more time, and we're going to look at the daily chart. And this is off of the COVID low. So again, let's go back here. So this is the next move we're looking at. We zoomed in here. Now we're going to zoom in one more time, and we're going to start off this COVID low here. This is wave 4 here. So let's zoom in one more time. And we can see off of this low, we also have a 5-wave structure, 1, 2, 3, 4, and 5. And off of this high, we now have a 3-wave structure down, but we also have a 3-wave structure up. So the issue with this move is we do not have a clean 5-wave structure. Again, because Elliott wave is fractal in nature, when we're looking at progressive moves, we want to see a 5-wave start to the move to suggest that we've begun the next leg of our bullish trend. This particular case, we do not have that. We have a very clear 3-wave move off of this low, off of 34.91. And right now, we're still well under the resistance zone that we would want to see broken to suggest that we're going to be breaking out in this larger degree and next leg up to potentially push it to new higher highs over the 48.08 high that was struck back in January of 2023. If we're unable to break through this resistance zone and unable to see a clean 5-wave move to the upside, what that's going to suggest is that we are indeed underway in that multi-generational bear market. Furthermore, what we want to see to confirm this, the next leg down, is we want to see a 5-wave move to the downside, which again is the direction of progression. So if we see a top in this region, in this 40.97 to 44.59 zone, and we see a 5-wave move to the downside, 1, 2, 3, 4, 5, that's going to signal that we have indeed begun the next leg down, and will give us a warning sign that we are indeed ready to break down below the 34.91 lows, and again, giving us further confirmation we have indeed topped this multi-generational top here. Right now, we don't see that quite ready to top just yet because we do not have that 5-wave move. So we are under the opinion that we will see another higher high over the high that was struck earlier this year before we see this top in this B wave. But how the next leg down, the structure of the next leg down moves, is going to tell us if we have indeed already topped in this larger B wave, and again this larger wave 3, or if we still have the potential to make that higher high before finding that top. I do want to caution that even if we do make a higher high here, we're still very, very close to seeing that multi-generational top, whether that higher high comes or not. We're likely within a year, if we do make the higher high, a year or two away from that multi-generational top. So even if we do make a higher high, we're still very close, and it's still something that we need to be very cautious about where we're at, what we're investing in, and how we're trading in the market. But again, how the market reacts over the next several months is going to likely tell us whether that higher high will be seen, or whether we are indeed ready to see that deeper drop down for the beginning of this of the C wave to confirm that we have indeed topped. Okay, so that's the basic part of the presentation. I wanted to leave enough time for questions and answers. So if you have questions, please go ahead and ask those now, and I'm happy to answer those questions that you may have.
All right. Well, thank you very much. That was a fascinating presentation. Waiting for some questions to come in here. So our first one from Chris. Are you and Avi no longer in conflict about whether December 2021 was the third of 4, as he was much later than you to allude to a final 5?
Both of our primary counts are the same. We're both, the primary count is that we've topped, and we are, the primary count is that we're in a B wave now. And again, depending on what the structure of the next leg down looks like, that will give us confirmation whether we've topped in this B wave and are heading this C wave down, or whether we will see that higher high. But right now we're all on the same page, and our primary count is that we have indeed topped.
Alrighty, thank you. And do you have any thoughts on the precious metals markets?
The precious metals markets, we are looking for a longer degree bottom. To put it simply, and Avi covers those in more details in the room, but we are bullish, in generally speaking, in the precious metals market.
Alrighty, thanks. Is there any correlation expected for this move down? For example, is gold going opposite of bonds?
There's really no long-term correlation between any of the markets that are not directly connected. So while there will be some correlation, there may be some correlation on shorter time frames between different markets. Over the long term, those correlations will almost always break down. So we don't typically look at correlations between markets that are not directly connected. So bonds and stocks and metals and forex, for example, those correlations almost always break down over the longer term. So it's not something that we analyze.
All right. Does the NASDAQ have a similar Elliott wave count as SPX?
The NASDAQ has a very similar count over the longer term. The NASDAQ may see another higher high while the S&P 500 is getting a B wave here. Just because the NASDAQ did not make a lower low in 2009. So the NASDAQ may, while the S&P is getting this B wave here, it's very possible the NASDAQ will make a higher high before finding an ultimate top. But in the near term, they're very similar. And I think that we are likely looking at a B wave and then a larger C wave down for this initial A wave. After that bottom, the NASDAQ, it's possible the NASDAQ will see a higher high while the S&P does not. But overall, they're very similar.
Thank you. Are there a stop on longs and shorts in the SPX?
It really depends on what time frame you're trading. Whenever we put out a particular trade, we always have stops and targets, and that's one of the advantages of using Elliott wave analysis for trading. Is it is one of the few methods out there that allows you to have targets, stops, and entry points all well and predefined before you ever enter a trade. So again, it just depends on what time frame that you're working within. In this particular longer term time frame, if we break down below the 3765 level on a 5-wave move, it's likely we're going to see a lower low. But again, we do need to see the structure and support level to give us confirmation that we're indeed already breaking down in the C wave. So both structure and price are important here at current levels.
All right. And do you have any thoughts on energy markets?
Energy markets are covered in detail, again, within our service. There's several analysts who cover those, and that can be found at Alleyway Trader.